Welcome, everybody. How's it going this morning? Infinity, Goose, Larry, Donald, Don, Wade, Eric, Sergio, Nikki, Terrence, Kenneth, Dan, Francois, Craig, General Rush. Good to see you, Al. Good morning, everybody. Laura, Rex, Al, Jan, Zoob, and welcome to the show. How's it going? Everybody doing pretty good? I'm Jeffrey Turnmeyer. I don't usually say that, but that's who I am. Welcome to the show. And if you want to chat with me like all the fine subscribers. I left my monster sitting over here. I moved it off the desk for a second. And there we go. Get it where we can see it. There we go. And great monster this morning. Welcome to the show. So if you want to be on there and chat like everybody else, click the button right over here in the corner, be a subscriber. That's the only requirement. A few seconds later, you can chat while I'm live. If I'm no longer live, you'll have to leave a comment down below. And while you're at that, expand the button, the more button down there in the description, and check it out. Like the market roadmap, $5. Come get you into Discord if you want to join the community of like-minded traders and keep the conversation going. There is information in there all day. Some days more than others. And of course, the more you support me, the higher level of access you get to me. I do have a Turnmeyer Trading Lab insider group that gets all my experimental stuff and all the other stuff. So if that interests you, you can let me know in the chat. But it's basically an interview process, like 321-888-3962 would be the way you get there. And so welcome to the show. And the bears appear to be cracking. The bears appear to be cracking. But look at this. Look at this. We've got 2007, 10, 13, 16, 19, 22. We're all the way up to the current. This is the number of green days in a row on the S&P or SPY. Look at that. The market doesn't like to be at extremes. All right, you can see it on this chart, right? We don't typically, like, this is from all the way back here in like 2005-ish. This is one of the most bullish periods right here. One of the most bullish periods. That ends 17 June right there. So this is not like I made this up early in the year. It's something I pulled right now. 17 May 2004 to 17 June 2024. So covering 20 years right there. Only this time right here in 2010 did we exceed where we are right now. Isn't that crazy? Isn't that crazy? Now, was there a big drop here? Not really. I mean, we were in the midst of a big drop, but so this is an unusual time right here. Now, if we inflation adjust the S&P 500, I'm sorry, I don't have this in a fancy dancy trading view chart, but right here, look, if we inflation adjust the S&P, we have not made a higher high. Isn't that interesting? Now, secular bull markets, they usually don't even, it just blows this away. Doesn't matter, higher highs or higher highs, it won't matter inflation adjusted or not. But with this current market, inflation adjusted, we're not making a higher high. Yet another warning sign. Yet another warning sign right there. So the warning sign, how many indicator lights does it take before we roll over? I don't know. The markets can remain irrational way longer than we can all remain solvent. You just got to be aware of the potential bads and kind of stay ahead of it. That's, if you know it's coming, you can prepare. You just got to wait for the signals. You got to decide what your signals are. If you're new at this, keep hanging out. I'll probably be aware of it. This one back here in 2020, I made a good chunk of money. I turned 250,000 into about 1.4 million in a month on that very swift drop. Here, it was a slow bleed out. It was a lot rougher right there. But I was on top of this turn here, and here we are now, and I'm warning you that This is not a Tigger. This is the inflation adjusted S&P 500. So this is not my charts, worked by others. I don't even have a quote on whose other work this is. So this is a inflation adjusted, this is S&P 500, but it's an inflation adjusted. So, and you can see we didn't top at 5,400 back here. So it's been, the back data has been inflation adjusted for current, the rates of inflation we've seen. All right. And then if that wasn't enough, check out the put call skew. This is interesting here. Put call skew suggesting we're getting to extremes here. 9.5 out of 10 to the bullish side. All right. This up here, bearish positioning. This down here, bullish positioning. We're the most bullish that the market's been in a long time. A good long time. Even through the highs in 21. All the way into the top of 22. We're getting overly bullish. We're more bullish now than we were when we rolled over at the top. That's extreme levels of bullishness are usually when things change. And Goose, I love this. Like when everybody tips the boat to one side, we're going the other way. Like, gosh, man, this is epically scary right here. We got a little you see what happened right here when we spiked down. We got that flash in the market. That's the pullback we just went through, but it hasn't really alleviated it all. And this is single stock put call skew, not the broader S&P 500 puts call skew. This is getting to be dangerous. Getting to be dangerous. That's what I would say right there. And let's see if I right here, fear and greed index. We're in greed. We're not in extreme greed. Usually when we top out up here in extreme greed, that's like a big indicator. And especially if we hang out there for several days. So we do have a little bit of fear from a month ago. Been sitting here last week, sitting on greed, creeping it up ever so slightly. We're not at extreme greed, but wouldn't take much to top this thing out. All right. Put and call options right there. You can see extreme greed. And safe haven demand, extreme greed. We're seeing a number of hedge funds dump some of their positions. So it's a cautionary time right here. All right, we've probably done the rally. We've done the big move up off the October lows. For those in the know down is more likely. So what do? You start booking out your profit very carefully, selectively, move into short-term trades that you can liquidate quickly, and then wait for the drop to go back in heavy. Now, the problem with this, though, is that the current drop may be outsized because of the extreme levels that we've come up to. If we could get a large correction here. This move right down into 4,600. You can see where I've got a bunch of alerts stacked up. That's probably the minimum correction we might do. Somewhere in this 46 to 48 zone right in here is where I really expect we might get an initial move down into that zone, a bounce before we go on down, or we build something constructive that we're going higher. So that's, it's just the chart telling me where we're likely to go. All right. It's not really magic. It seems like magic that I get it right all the time, but it's not really magic. Now, why is this concerning me is when we really dive into the S&P, this pullback that we did from March all the way down through here into late April, it's kind of like, seemed like a big pullback, but it wasn't really big at all. The extension of that, we came up here right to it, right at this 5309 level. We've been there 1 day, 2 day, 3 day, 4 day, not reaching on up to the 1272 at 5350. We did a couple spikes trying to get there, but we have not been able to break higher. Cautionary tale. Major resistance. What happens when we can't break higher? The warning signs pile in. Now, if we go off the lows right here, up to the high right here, I gotta remove another. So we have support right here where I drew it. So this will be the initial support. If we get below this zone right here, down below this 50-60 area, odds are we're going on down in a blaze of glory. Right there. So there's your levels. You want to put alerts on them, whatever it is. So you got a 5150, the bottom of the zone right around 50-60. If we get below that, odds are we're coming on down. Coming on down. Now, why exactly is it that way? Well, this, and right there, 272, 1618, right up there at 4840, and the 272 down there at 4650. So that's, and if you look over here, that's kind of the top of where we topped out back in July of last year. So there you go. All right, before I get too deep into actual how to trade it, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because I got it right in the past doesn't mean I'll ever get it right in the future. I may be completely wrong on what I just told you. I mean, it's entirely possible. This presentation intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell anything. All right? No stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, don't trade them. You may incur a significant risk of a loss. All right? Think about it. Every trade, 50-50. Buyer, seller, winner, loser. Every trade. Every single trade. And if you desire personal financial advice, hire and consult a financial advisor. All right? That's not me. It's not what I'm doing. I'm not trying to tell you how to do it. I mean, I've got some blanket advice like don't stay wrong in the market. All right? And, don't buy stuff from gurus. Don't buy stuff from people like me unless you trust them. Make sure that you got a like-minded set of system. If you're not jiving with me right now, cool. Thanks for watching, and I hope you find somebody else. But if you do like the things I'm saying, make sure you give me a thumbs up. And let me know. Interact with the video. Share it with a friend. All that kind of stuff helps me out. And thanks for being here. Thanks for being a follower. Thanks for your attention. Now, right here, FOMC members coming out speaking, and apparently what they said was not super awesome because the ES here, look at this, rolling a little bit, jumping the smaller time frame here. Look at that, ouch, ugh, turning a little sour. And Russell, look at that, ooh, turning a little sour. And even the NASDAQ turning a little sour here on the smaller time frames. So about to take back yesterday. Yesterday we had a nice big fat pop, hit right to the 1.1448, which is 90% of the way to the 1272 up there. Did that on both ES and I said we did that on both ES. ES missed right there. NQ hit, was outperforming. And ES. What the heck? We did come up shy. And Russell here was not even pretending like it was bullish yesterday at all. So watch out for the bro. This is the canary. Yes, no, maybe. Might be. All right. Stocks above the 200-day. Switch to a daily. And take it off of log mode. Check this out. We're kind of sitting here. This is stocks. This is your S&P 500 stocks above your 200-day. You didn't know how to pull this up. S5TH. Lower high than we made back here in April. Even though the S&P poked up higher, technically, the little bitty boop. This is rolling. Is this indicative we're about to go even further down? That's a big possibility right here. Pointing this stuff out. Possible we go on down. It could lead to a return to the bottom. Now, S5 FI moving up or moving down in time frames. You know, stocks above the 50-day made a much lower high. I kind of expected it to come up and test the downtrend again, but we're stalling out right here. This is concerning. We didn't touch the 80 here. I mean the 20, where 80% of the stocks are below their 50-day moving average. The thing about it is 80 and 80. 80 below, 80 above. So 80 when we're up here, 80% of stocks are above their 50-day moving average. When we're down here, 80% of S&P 500 stocks are below their 50-day moving average. And while we didn't, it seems we're not going to reach up there probably. This may be stalling out and we go down. You know, I've been calling for the bottom for, gosh, all the way back here in January. We're going to go visit. I've been warning. We've ground, you know, we had a little pullback, a little lightening in the market, and we've ground higher again, making that higher high. But look how significantly lower this is. You know, this is not ultimately bullish. This is indicating divergence in the market. Divergences show up like crazy. Divergences show up like crazy right before a bigger move in the other direction. So, dun 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 dun. Watch out! Watch out! Watch out! Stocks above the 20-day did tag the top. That may have been all we needed. This is a lower high yet again. This is even faster because this is stocks above their 20-day, held the downtrend. Maybe what we needed to go back down. This one's much more volatile. You can see much more frequently goes top to bottom, bottom to top, than 50-day, or the 200-day is very slow. Like the last time we were down at the bottom was back here in 22 in October when we made the big bottom in the market. And then we just now topped out here in April and making a lower high here in May. We could start a downtrend that lasts for a while. This could have been the top. Now, rewind. We actually made the top April 21 before the market topped out here in early 22. So this led the way a long time before we actually rolled over. 6 months, in fact. So could we mess around over here for 6 months before we actually rolled over? Entirely possible. Entirely possible. I could be like a broken record for 6 months here. We'd be looking at December before we actually break down in a big way. So be careful out there. All right. And if you got requests, 5 p.m. tonight, 5 p.m. Eastern, I do a request show for at least 30 minutes. Usually it's like an hour and a half lately. So make sure you subscribe and hit the notifications and put it on your alert in your phone that you want to come give me a request. I'll go over your charts and give you my analysis on your chart. Bring your tickers. Bring your tickers. It's always a good time. And that'll be later. Coming up at 5. Today, Tuesday. Every Tuesday. Do that at 5 p.m. Eastern. Been doing it for, gosh, 2.5 years. Haven't missed a week. So come check it out. Come check it out. So like I said, ES hunting for a top potentially. In Q hunting for a top potentially. If nothing else, we're probably going to do a little bit of, I mean, look at this move. Look at this. We shot right up there. We may do a little consolidation and push the final move up into there. That's what it's looking like. That's what it's looking like. We may get a little bit of consolidation back down in possibly where we were topping here, right back down there, before we can do the final little boop right up in there. All right. There you go. That's what it's looking like. That's what it's looking like. Russell here. I have to say, watch out for a breakdown below this 2070 level. That's probably indicative we're going right down to the roadmap line at the minimum. And then that could be deeper. Now, if you're unfamiliar with Russell 2000, IWM would be a way to play. Make it a lower high here. Stalling out 1, 2, 3, 4, 5 days. 6 days if you count that one. We kind of popped and then drifting off lower, and we break that back down below this zone around 204 on Russell, probably coming back down to the roadmap line at the minimum. And if we get below that, it can lead to a much bigger down, possibly 130 to 150 area down here. Just saying, it's on the chart. This has been cooking for a while. When we zoom IWM out, look, the high all the way up here. And while the S&P and the NASDAQ are pushing all-time highs, this one has lots of air between where we are and the all-time high. That's not exactly what we call a strong market, since like 85% of the population of the United States works in here. All right, these are not the biggest companies, but this collective is the biggest set of employers in the United States. All right, they employ more people than the S&P 500 or the NASDAQ. They're not bigger companies, but there's more people that work here. And why do we all feel like everything kind of sucks? Because our smaller companies are having a rough time of it. All right, that's why. There's some new trades kicking off right there. All right, moving on. Oil. Dun, 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 dun. I got a lot of stuff drawn on this oil chart. I apologize in advance. We'll try to simplify it just a little bit. So at this point, key level right up here, 618. But to get to there, we've got to break above this uptrend of the lows that we had off of this low back here in December. And uptrend of the lows, we broke down below it right here in May, or basically May 1st, broke down below, and we've just been consolidating right there. Consolidating. Today, getting a little bit more lightning to the bottom, but holding support. So we've got support down to 77.50-ish. We've got resistance up here to 80-ish. It's a very narrow range for oil. If we can break out, up the top is going to probably go up here. Here is 84. And then we get above 84, we're probably going to 90, and then 105 above that. If we stay in this zone and we break down, that could lead to a revisit of the lows, possibly an extension lower down here in the 60s. Now, which one am I biased for? I'm kind of thinking we're probably going to break higher, but I'm not positioning either way. All right, this is not telling me which way it's going yet. We keep banging our head on the resistance. We keep testing the floor of support, have not been able to push below it, and we just keep going sideways. So sideways would be the expectation until, an object at rest stays at rest. I mean, it's simple physics. That's same in the market. An object consolidating is going to keep consolidating until some point where it breaks up or down. Now, it could do a fake out, entirely possible, but I think once we get above this zone, we're going on up here at the minimum. We get above that zone, we're going on up to 105. 90 at the first, and then 105. And if we get below these, probably coming on down here to test this, where we topped and we poked through, and then we bottom right there. So we'll probably test this again right here at 75. We get below that 75, probably coming on down, revisit the lows. So there's your kind of outline for oil. GC, gold is set to go higher at this point. Probably going to get 2,500. If it comes up shy of 2,500, I'll be quite disappointed. But right now, indicative that we're going to pop on up 2472, 2,500. That's what I would expect. And we did that little pullback there, turning green a little bit. Bitcoin, look at that move, baby. Firmly pushing higher. Target up at 77 at the minimum. The minimum. Probably 80 and even 85 above that at this point. Right up here. That would be the next push higher. I would expect to follow through. Now, can we reject? Yeah, we can always reject. We have this high right here that we're coming up into and having a little trouble. So we got a nice big fat update yesterday. I was up like a ridiculous amount of money, well into the mid 5 figures. 5 figures? Yeah, 5 figures. Well, actually upper 5 figures, I guess. Yesterday, I'm a little bit heavy on crypto. So that move, pretty nice to see. If we can break on out, this thing might go quite crazy pretty fast. All right, so be careful. Now, Ethereum catching up yesterday. They were talking maybe these spot ETFs are going to get approved on Thursday. Possibly. It went from like a 25% chance to maybe 75% chance-ish, maybe, possibly. I don't know. We'll see. The politics going on. You had the FDIC chairman of FDIC resign yesterday due to sexual harassment allegations. And it's speculated that Mr. Gensler, Gary Gensler, who is adamantly against Ethereum, may be next on the list to tender a resignation for such infractions, which he's a big proponent of making Ethereum into a security. And if he's gone, he's a big opponent of crypto. So if he's gone, then kind of clears the runway. So this is, while I don't usually get into the politics, removing certain people from certain places in the market can free this up to move more. All right. Just be cognizant of how that might play out. I guess is the, you got to stay aware of all the potential goods and potential bads that are hanging out here because they can affect what we're doing. Now, I don't believe the news carries the chart. I believe the chart carries the news, and we broke above the 618. All in one swift go right here. One big swift go. That kind of tips the odds. We're going up to 44.83. So that doesn't mean we won't pull back again here before we go, but it could mean we just go from here up there. And it could get an outsized move because the bigger pullback here sets us up where 5,900 would be the target up here. We're already in the trigger zone, so 5,900, it's just a matter of time before we go probably visit that, right up around 5,900, 6,000 area on Ethereum. Just a matter of how long can you wait and how deep does it retrace against you before we get there. That part is a little unclear. Dollar, holding support really well. Nothing clear at the moment. Nothing clear. Now we're holding support and that can result in a pop, but we got to get back above this 105.50 area to indicate we're going on up to 106, 107, and possibly the 108.50 that I've been talking about for freaking months and months and months and months and months. Seems like yet another pullback on the way. Now, time is the hardest thing on this whole thing. I give you price targets all the time. I just don't know how long it's going to take most of the time to get there. I make guesses here and there. I make trades, but it doesn't always work out. So LRCX popped, but this is all just choppy. Probably gonna retrace back down in here. What qualifies it for the list? The poppers are things that were $2 or more up in the pre-market, and like MSTR already gave it back, and Coin already given it back quite a bit. I really want to see Coin hit there. MSTR, I caution, this is not leveraged Bitcoin, but it's moving like it's leveraged Bitcoin, and we could get an outsized correction. Just be careful. Please be careful. Please, please, please. And this is particularly scary at the moment. Circling back to MSTR for a second. This move right here, 1, 2, 3 could push us right down in this zone right here. Maybe like, no way, it's going from 1,700 to 600. It's in the chart that we could see the pullback right there. If we don't hold the roadmap line, it could come right down in there. Be careful. All right. Be careful. I don't know what would cause that. Mr. Sayer could be found in the back of a trunk. I don't know. Be careful. And the chart's saying to be careful. I'm saying be careful. I'm just, I could throw out a million different possible scenarios, but be careful. Coin, I really want to see it hit this down here. So far, we're kind of still trending down. Make it a little retrace on Bitcoin today. EETH, excuse me. EETH. This is a futures based ETF, is indicating we're breaking higher, possibly going to go up to 97.101 or even 112 above that. We get the daily close up here. That's the target right there. Lows. Ugh. And talk about beating on the top, beating on the bottom, still getting murderized on the chart. Not very strong. I tell you, got to be careful. Got to be careful. We're not, if we can bounce, we're going up here. If we break down below this zone right in here, this consolidation, we're probably coming on down here. That's the long and the short of it. Long 280, short 150, 140. GB or GTBP. Golly, that's a dumpster fire. Biotech, pharmaceutical, biopharma, dumpster fire all day long. Be careful. Be careful. Oh, cool. My finger broke. There it goes. All right, be careful. That's what I got to say. Dollar General, DG. Just hanging right at the roadmap line. Not being, I mean, that's a nice pop. $7, but be careful. That's not indicative that we're doing anything yet. Now, if we get the roadmap bounce here, that was the move. Breakthrough, retrace, hold, push back higher, get above 155. Probably going up to 171. Right there, 175, maybe 186 before we get another pullback, but that's right into that big gap down. That's going to be resistance going higher. There's going to be people that got trapped up here. They're going to be looking to get out as it comes back and makes them back to even. They sat through this, bag holders. They're ready to get out. Be careful. TNDM, tandem diabetes care. I guess this one's showing that GLP-1 drugs didn't put the hurting on it like people thought. Coming back a little bit. And I don't really have much to offer as far as upside targets, but that's going to be resistance. Consolidate a lot, consolidate a little, banged our head on it, and then dropped on out. Probably going to be resistance right there around 60. CONL. This one, potential market roadmap bounce. Going to have to get above 69 to head up to 100. KOLD, pushing on lower, right down on the target. 35, 23 below that. LOGI, that's a set of lower highs. Be careful on this. If we can get above that, heading up to 101. If we reject it, probably coming down here to 57. That's a big range. Be careful. I mean, that's not very much upside. $10 upside compared to 40-ish bucks a downside. Be careful. PANW, reporting earnings, beating on the top, beating on the bottom, was down $20. Yeah, still down a little bit, rejecting off of the gap fill. And these gaps, people got trapped. Big fat gap came up. Look at that. We retraced right up there, rejected, right there again, rejected. If we can hold here, see that high, came right back to it. We kind of broke out, retraced it. That can lead to a pop. I am still long 5 whole shares of this. You may be like, how can you make any money? All right, 5 shares, that's $1,500. It goes up here to the target at $410. That's $100 a share. $100 a share. I mean, that's pretty reasonable. Pretty dang reasonable. It's like 30% return. on my 1,500 bucks. So it's worth holding. There's no theta. You can just hold shares indefinitely. So holding those shares, looking for that pop right up here in the 410 area, right up in here. Just sit and wait, smile and wave. CTNT looks like a piece of garbage chart. Don't trade stuff like this. Don't do it. Don't trade stuff like that. It's low priced and super dangerous. Super dangerous. Look at that. Losing money. It's a piece of garbage stock. ODD. Oddity. That's a gnarly chart pattern. Broke out to the bottom. Back test. Probably. Odds are we're going lower low than we had right back here. Whether it's today, tomorrow, next week, next month, I don't know. But with a chart pattern like that, odds are probably coming down here eventually. Sometime in the future. MU. That one's got a target up here, 140 to 160. Probably do it sooner or later. Find a little resistance at that. I'm sure it's at the 1.1448. If we draw it. It's like my new favorite fib line. Up, not that way. Oh, that's based on the bigger pattern. And it's already on up there. Yeah, so that's an expansion pattern, and probably likely to go on up to 160, 140, 160. Baidu with like 9 gazillion tickers. I don't always remember what I got drawn on each one. Baidu retracing. Oof. Rejecting the roadmap line. Can it hold that support zone that I drew on there? I know there's a lot going on this chart, and that was back testing. It's actually back testing the downtrend too. See that downtrend of highs? Popped above it, hit the head on the roadmap line, retraced back down. That's where we're sitting. That's also a move up and a 618 retrace. If we get all the way down to 102, 60. These are the things that reversals are built off of. Be careful here. Be careful. Don't bet on it short. Don't bet on it long until it proves it. But we can get an outsized move off of Baidu. Now, could it let me down? Absolutely. It's taken way longer to consolidate than I thought it should. But this move here, once we break above the roadmap line right up there, I don't even have any better colors to color this. You know, the roadmap line basically coming in right there. We get above that 111 area. Really tipsy odds we're going to do this move right up in here at the minimum. Possibly something much larger could be in the works. Move up in this area. But don't get ahead of ourselves. It's got a nice pattern, but we've got to do the little things before we can do the bigger things. So if this doesn't hold and we break down below this 101 area, odds are this whole pattern's wrecked. That has been building for years. SPT. And getting close to the target zone. NTES. Still looks like it wants to go lower to me. PDD. Temu going on up to this. They run Temu, if you didn't know. And 157 would be the target. 150. Well, let's go 155. Working on it. One little pop. Get to the target. So we're near the target. Be careful. I've already come up way off the lows. Here was the activation right in here. And that's the target. Possibly 169, but I'd be careful. Doesn't have to. BL. 1, 2, 3. So this was a 3-wave type move up off the lows. Where this move and that move, very similar, not the same. It's a little bit smaller on the last move there. And this is indicative that we may break down and head lower That target would be right down here. Right in that zone. Right down there around 44, possibly 41. That's what I would expect out of BL. CS, still consolidating the support zone right down here around 150. CWB, potentially popping. China Bulls, little retrace. I kind of would expect this. This is leveraged and China. That's like two of the red flag things that I don't like to trade. Potential right there. Retrace. We do that. Sets up the market roadmap bounce. Right there, which 46, 48 on the potential upside. EDU holding in there at the roadmap line. We got to get above that 88 zone to head up to 104 area. BABA getting a little retrace. We did the bounce, got the extension. Probably going to do a bigger bounce, possibly down in here. And it moves up. Everything moves up. So at this point, it looks like a retrace to the roadmap line would be in order. So we may see China retrace, refresh, longs on China getting a little long in the tooth anyway. So we may see a flush down before we get the next move. Got to do the little stuff before we can do the bigger stuff. GL, and that one looks like a piece of garbage. Chart. It looks like it's going on down. Now that could have been the bottom. I'd bet though that since we didn't even get near the roadmap line, that we're probably going on down. We did bounce up, found resistance, and looks like we may come on down. That's what it looks like. Alrighty. For those of you that did TDD, look at that baby. It popped right up to the target zone at 97. Beautiful. 97.50 is where I got out. Right there. Right there. Beautiful, 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 beautiful. That was a picture perfect trade right there. That retrace right to the roadmap line, bounce, activation right there. We consolidated for a few days and then pop right up to the target. 97.50 is where I got out. And now we wait for another setup. Maybe where's TDD going next? Don't know. Don't care. I'm out. Moving on. Looking for the next one. So that was chart of the week from 2 weeks back. All right. Made 12% on just shares on that little move from here to here. You can say all you want that you can't make money on shares. That was held it for like 10 days and made 12% or something like that. Just craziness. Crazy fast. And bias for the day. I'll be back 5 p.m. Make sure you set your reminder. 5 p.m. I'll be back taking your request live. Now, the funny thing about a request show, I got to have people show up to be able to do it. So don't have a show without you. Viewers like you make the show possible, as they say on PBS or whatever. Bias for the day. Caution. We could pull back or we could launch on up and hit the target there at 53, 50. Upside resistance at this point. And as long as we're below that, potential to pop it. But watch out for the retrace. This is looking like it's getting long in the tooth here. And we may work on a bigger retrace. Just lots of stuff kind of piling up here. Lots of stuff. Lots of stuff. Anyway, have a great day. I'll see you again later. Bye for now. Stay safe out there. The account